Plotkin founded Melvin Capital in 2014. He had previously been one of the most prominent traders at Steve Cohen's SAC Capital hedge fund. Plotkin mostly trades consumer stocks, and in 2017 Melvin Capital posted returns of 41. If you've been on the internet the past few weeks, which I'm pretty sure you have, then you probably have a general idea about what went down between GameStop and Wall Street. Many hedge fund managers reported to have lost billions of capital during the entire debacle, but that didn't stop Gabe from revamping his home to turn it into an even bigger mansion. But wait, how is that possible when his company lost $4.5 billion during the showdown between GameStop and Wall Street? If that happened to me, I'd probably save as much as I could, but then again, I'm no Gabriel Plotkin. So, how exactly did his hedge fund lose so much money? And how did he become a hedge fund manager with billions of assets under management?
Let's get down to business.
Not much is known about Plotkin's early life, and Gabe has zero presence on social media, but I did discover that he graduated from Northwestern University back in 2001 with a degree in economics. And for the record, it more than looks like he's been able to put his degree to good use. After university, he joined the hedge fund Citadel LLC before joining the North Sound Capital team, a hedge fund based in Connecticut. After his stint there, he then traded at SAC Capital, where he managed a portfolio with stocks that were cumulatively worth $1.3 billion. He stayed with SAC for a while because it seemed to be going great for him there. However, something went down that prompted Plotkin to start his own investment management firm. While working at SAC Capital, Plotkin was allegedly found to have been the recipient of illegal insider information. A civil complaint was filed against an SAC PM named Michael Steinberg by the Securities and Exchange Commission, and in the report, Plotkin was identified as Portfolio Manager B. Steinberg was arrested for trading computer company Dell's earnings using insider information, which is a big no-no in the world of investing. Plotkin was allegedly at the receiving end of some of the emails that Steinberg forwarded that contained insider information. The whole investigation pushed Plotkin to leave SAC Capital to start his own company, Melvin Capital. To add sentimental value, Plotkin said that he named the fund after his late grandfather, who was a businessman himself. He was able to raise almost $1 billion, and when it was established, Plotkin talked about it to Bloomberg. He said that the fund was a human-intensive place, requiring a lot of analysts to work on the company's proceedings. He also mentioned that the fund places a lot of focus on the short side, primarily short selling. In 2017, Melvin Capital found itself finishing up 41%, and among its investments, Amazon, Las Vegas Sands, Alibaba, and GameStop were the most notable ones. In 2018, Gabriel Plotkin's name appeared in headlines, labeling him the new villain in the world of Nintendo. According to regulatory filings, Plotkin was able to get a $375 million short bet against Japanese game giant Nintendo. By that time, Melvin Capital already had roughly $7 billion in assets, and it didn't explain its reasons for shorting Nintendo. Because of Plotkin's actions, executives, investors, and analysts alike became confused about Nintendo's state. Although the Nintendo Switch had boosted the gaming giant's sales, even earning itself the reputation of being one of the fastest-selling consoles in history upon its release, Nintendo's shares dropped drastically in May. Although the company's profit had quintupled during the whole Switch craze, analysts were left bamboozled by the declines. It had been the biggest gap between the actual stock price and brokerage targets in 10 years. Melvin Capital's reputation for shorting plays an important role in its loss of literally billions of dollars during the entire GameStop scene that unfolded. For those that don't know, in shorting, the investor will borrow a stock, sell it when the price drops, and then buy it back to return to whoever lent it to them. Investors then earn the proceeds from the sales of the shares. However, this can be risky, because it is still possible that the price of the stock will rise. If this happens, investors stand to lose money, since they will have to buy the shares back at a higher price, because, well, the shares weren't theirs to begin with. This is what happened with GameStop and Wall Street. It's not a secret that most businesses were terribly hit by the global coronavirus pandemic. GameStop was one of them. It was once supremely successful, but its sales began to decline when video game sales shifted to online platforms. It struggled even more during the pandemic, which institutional investors, like Plotkin's Melvin Capital, took as a sign to short the company. For a while, nothing much happened. However, members of a Reddit forum named Wall Street Bets decided to band together to buy GameStop shares. At first, it was because they thought it was undervalued. Then, it was to prove a point to short sellers like Gabe Plotkin. On January 26 of this year, Melvin Capital was forced to close out its short position on GameStop. In early 2021, the fund lost over 30 due to numerous short bets that went awry, including GameStop. To be exact, they took a loss of $4.5 billion. Users of the subreddit Wall Street Bets made widespread calls that GameStop's stock would increase in value, causing the price to inflate exponentially. In January, Ken Griffin's Citadel and Steve Cohen's Point72 invested $2.75 billion in Melvin in exchange for non-controlling revenue shares of the fund. CNBC's Andrew Ross Sorkin reported that fund manager Gabe Plotkin advised Melvin Capital had closed its short position in GameStop on January 26 in the afternoon, although CNBC could not confirm the amount that Melvin lost. Melvin Capital also contended that rumors of the fund intending to file for bankruptcy are false. On January 27, Bloomberg News reported that losses had continued past the 30 reported on January 24 by the Wall Street Journal, although their sources would not give a specific number as to not upset Gabe. The short position adopted by Melvin Capital and others resulted in more than 139 of existing shares of GME being shorted, making GameStop stock the most shorted equity in the world. Through the end of January 2021, the fund was down 53 according to the Wall Street Journal. In February, Melvin posted a 22 gain. Even with this addition, Melvin will need to produce an additional 75 gain before they break even. Due to their successful spree Wall Street Bets, people have begun to do the same thing for other shares that hedge funds have bet against, list BlackBerry and American Airlines. The whole thing is further proof of the power of collective action and the power of social media. Although Plotkin's hedge fund recently took a terrible hit, sources confirm that he's still got his head above water, and this didn't stop Plotkin from having his Miami Beach house renovated. I guess while making sense of his losses, Plotkin lost himself in the construction of his home. The rumors of bankruptcy were found to be untrue. He covered the shorts and is continuing to move forward in his business despite the loss. This is a calculated risk that can happen at any time, and all hedge bettors realize that there is no such thing as a sure deal, so they have contingency plans. Plotkin is still reported to have a net worth of about $300 million, which qualifies him as a very rich man. In the hedging end of the financial industry, fortunes are made and lost with frequency. He still manages assets of around $12.5 billion through Melvin Capital. On top of that, he holds shares in Amazon of an undisclosed amount and about $20 million in Bath and Body Works. He's still in business and going strong. Luckily for Gabe, he had taken home roughly $846 million in 2020, which leaves him quite a lot of leeway in the financial department. Nowadays, setting up your own website is as easy as pie, and you don't need to know how to code. It's even redundant to code nowadays and not just reuse parts of other people's code instead. With WordPress, you can create your own website and blog in just a few clicks, and yes, you don't really need to know how to code to be able to utilize the platform. Many brands and businesses have created their own websites using WordPress, and by doing so have driven up their individual successes. Have you ever thought of who is behind the platform? He's a man that goes by the name of Matthew Mullenweg. Who exactly is Matthew, and what was the original idea behind WordPress? That's exactly what we're going to be talking about in the video up on your screen now, so click away, sit back and relax, and see you in the next video.